Thank you. Up next, we have the East region, and I think Joy, they're going to work on turning this down just a skosh. We have the East region, and it's Rustin Moore, Senior Associate at Benswanger Realty Advisory Group in Los Angeles. Rustin.
Thanks for having me. I'll start off looking at the different submarkets of the San Gabriel Valley. Text is a little out there. In the City of Industry South area along the 60 freeway, we have La Puente, Walnut, City of Industry, close to 100 million square feet. The 210-605 corridor, Irwindale, Azusa, Baldwin Park, 25 million square feet. Similar size region in the east, Pomona area up to San Dimas, Laverne. And then we have the southwest region, which is about 10 million square feet on Lonnie, San Gabriel, Rosemead, and South on Lonnie. Next slide. Stats throughout the year, 170 million square feet of base industrial-wise in the San Gabriel Valley. Vacancy rate is down about 0.2% to about 4.25%. We had good, strong absorption throughout the entire year. Each quarter was anywhere from about 300 to 800,000 square feet of net absorption, except for the third quarter, which was about 1.5 million, which kind of correlates with what you hear in the news throughout the year. The businesses expanding and getting more or less bullish. Leasing activity is up about 2.5% to 4.5 million feet. We had strong sales activity of about 3 million feet. We had about 1 million square feet delivered in the San Gabriel Valley in 2011. 650 of that was the Weefong Foods build-to-suit in Irwindale, and it currently says 374 is under construction. That includes the 300 Majestic recently finished in City of Industry on Grand Avenue, so it's almost zero under construction right now, with the exception of some small build-to-suits. Lease rates are up about 1 cent to 43 cents triple net, up slightly above 100,000 square feet, and down slightly when you get under 100,000 square feet. R&D and office, both were fairly flat. Office vacancy rate is down about 2% to 13.5%. Both had a decent 100,000 square feet of net absorption. Zero construction, flat rates. Office is currently about $1.80 full service gross. And as a hint to the market, comparable to other markets, the Class A space of office is the highest vacancy and most challenging to lease up. Next slide, please. Year in review. As many markets, the institutional interest is at an all-time high. You'll get deals done around 6 cap. For example, KTR purchased the building, 600,000. Workman Mill, Whittier, City of Industry area, that was a 6 cap when they finally got in Michael Kors as the tenant. If there were more availabilities, we'd have more deals. Demand and pricing increased steadily. Again, that third quarter pop. Big box space has increased in the availability with some new deliveries and vacancies, but for example, landlords like Majestic with 6, 7, 8 buildings available in the industry area above 100,000 square feet. A good amount of offers going back and forth, RFPs, so hopefully there'll be some good activity at the starting of the year here. Class A product has performed the best with the Class B and C property, lower clear, more challenging loading, sitting on the market for longer. And we continue to see sales pricing, especially on the owner user sale, increase. A lot of foreign buyers, cash deals, anything from maybe 10 to 30,000 square feet. Next slide. Sales transactions to go over. A really neat project was the Baldwin Lamar Distribution Center that Overton and Moore purchased in 2010. 2 of the 3 buildings have been sold. 96,000 square feet, sold for $85 a square foot. And the older, lower clear building was also close to 100,000, sold for $71 a foot. Standard for City of Industry, 30 plus years old, and $85 and $71 a foot are huge increases over, say, 18 months to 2 years ago, where obviously they bought it for roughly $47 a foot. You couldn't get these buildings given away for $60 a foot. And there's still 1 building available in that park. On the lease end, I wanted to talk about, next slide, two buildings. One of them is a renewal, so I didn't put it on there, but Superior Communications renewed in Irwindale for about 225,000 square feet. That was a good clip. It was at 44 cents triple net, and it comes out on a gross basis, about 60 gross. on a 10-year deal, Class A space in the Urbandale Business Center. And another deal, Caryland expanded in the park on East Walnut Drive North. They were at about 100 feet in the back of the park, moved into about 145. I'd say it's a very good deal for a tenant, but landlords are obviously looking to fill up this Class B and C space. 42 gross flat over the term. They got a couple months free, and Majestic built them brand new offices. And forecast for the year, I'd say similar to this past year. Demand will remain strong. I think everything will remain positive. Vacancies going down slightly, but again, it's really the Class A and B stuff, dock high loading, especially on the small owner user sales, good ceiling heights, yard area, versus we're going to see a lot still sitting in the market that's less desirable properties. We'll see hopefully an increase in new construction with some build-to-suits and some new parks, El Monte, City of Industry, and Pomona. I think with a couple build-to-suit deals, you might see some more spec development, or at least a few buildings being built in some of these planned land sites that buyers were paying $20 or $30 a foot for them. On the office side, I think we're going to see less renewals and contractions that we've always been seeing, and hopefully see some more new expansions, and of course renewals. Keep away that sluggish office market. And overall, just a continued slow recovery. If I were the owner buying a building in the San Gabriel Valley, I wouldn't expect a huge pop, but I would expect good solid pricing, and just don't expect anything major. I think on the lease rates we will see the uptick, but again, nothing major. And thank you.